China's recent moves signal a shift in global financial strategies as it reduces its holdings of U.S. Treasury bonds and boosts its gold reserves. In July 2024, China sold $3.7 billion in U.S. Treasury bonds, continuing a trend of reducing its overall U.S. debt holdings. This sale, combined with Japan's decision to reduce its U.S. Treasury holdings, is placing significant pressure on the United States, which faces high debt levels and is struggling to find new buyers for its debt. These moves come as the U.S. is dealing with severe inflation, prompting discussions about interest rate cuts by the Federal Reserve. However, these potential cuts carry risks, as they could lower borrowing costs but also reignite inflation. The economic strain extends to U.S. farmers, particularly those in the corn and soybean markets, who are already operating on thin margins. U.S. farmers may face a significant blow as China, one of their largest buyers, reduces its imports of U.S. agricultural products. While U.S. farmers could pivot towards supplying corn to ethanol plants, this wouldn't compensate for the loss of the massive export market China once represented. China's self-sufficiency ambitions further exacerbate this issue. The country aims to grow most of its grains, such as corn, wheat, rice, and soybeans domestically, but it still faces challenges in achieving this, particularly with crops like soybeans and corn. These are vital for both human consumption and livestock feed, and China has relied heavily on imports. China's decision to reduce U.S. debt holdings comes at a time when U.S.-China relations are under strain, with the U.S. continuing to impose tariffs on Chinese goods and accusing China of aiding Russia in its conflict with Ukraine. This tension adds to the uncertainty surrounding the U.S. economy, with analysts like Peter Schiff warning of rising risks of a U.S. government shutdown, debt defaults, and an economic recession. The upcoming U.S. elections in November 2024 add another layer of uncertainty. Whether Donald Trump or Kamala Harris wins, there are concerns that the next administration may exacerbate the U.S.'s debt and deficit issues, especially in a high-interest rate environment. In this context, the dominance of the U.S. dollar in the global financial system is being questioned. Harvard University's Professor Aditi Kumar has suggested that gold might regain its role as a global trust anchor, especially as countries look to diversify away from the U.S. dollar. Gold, free from credit and default risks, has seen a significant rise in value, with prices hovering near historic highs in September 2024. The world's central banks are increasingly turning to gold to hedge against risks associated with U.S. debt and a weakening U.S. dollar. This year alone, central banks have purchased 483 tons of gold, a 5% increase year-on-year, signaling a global trend towards gold as a reserve asset. China in particular has been aggressively increasing its gold reserves. From January to July 2024, China added 29 tons of gold, bringing its total to 264 tons, the highest ever recorded. China's stockpiling of gold is part of a broader strategy to reduce its dependence on the U.S. economy and the U.S. dollar, as it seeks to diversify its reserves and protect against financial risks. Brazil is also playing a growing role in global agricultural trade, especially with corn exports to China. However, Brazil's 2023 to 2024 corn crop was 12% smaller than the previous year, leading to a 29% drop in exports during the peak shipping season in July and August. This decline in Brazil's exports might provide some relief to U.S. farmers, but it won't be enough to replace the large volumes of U.S. corn that China used to purchase. U.S. corn exports are further threatened by Mexico, the second largest buyer of U.S. corn, as it plans to ban genetically modified corn by the end of 2023, which makes up over 90% of U.S. corn production. China's agricultural self-sufficiency goals present a significant challenge for U.S. corn exporters. Despite its efforts to improve domestic corn production, China faces numerous hurdles, including poor soil quality, outdated farming practices, and seed technology that lags behind the U.S. by about 2 decades. Chinese farmers use large amounts of fertilizer, often inefficiently, contributing to environmental pollution. China's reluctance to fully embrace genetically modified crops also complicates its efforts to boost production. While China has allowed a small portion of its cornfields to be planted with genetically modified seeds, it has largely relied on imports to meet its needs, especially for animal feed. Even as China works to reduce its reliance on U.S. corn, experts believe the country will continue to need significant imports to meet its growing demand for animal feed, at least in the near term. China's middle class is consuming more meat, which requires more corn to feed livestock. China currently needs about 250 million metric tons of corn annually, and domestic production alone is unlikely to meet this demand. However, China is increasingly looking for alternatives to U.S. corn, including importing from countries like Brazil, and investing in improving its domestic agricultural capabilities. China's recent economic moves, including reducing its U.S. debt holdings, increasing its gold reserves, and decreasing reliance on U.S. agricultural imports, are part of a broader strategy to reduce its dependence on the U.S. This shift has significant implications not only for the U.S. economy, but also for the global financial system. As China and other countries seek to diversify their reserves, gold is emerging as a key asset, potentially challenging the U.S. dollar's dominance in the long term. The U.S.'s reliance on foreign buyers for its debt is becoming more precarious as countries like China and Japan reduce their holdings. Without new buyers, the U.S. may face increasing difficulty managing its fiscal health. Moreover, domestic economic pressures, including inflation and the risk of recession, are compounding these challenges. The upcoming 2024 elections add further uncertainty, with the potential for policy shifts that could either help or hinder the U.S.'s ability to manage its debt and economic challenges. In summary, China's moves to reduce its holdings of U.S. debt, increase its gold reserves, and lessen its reliance on U.S. agricultural imports are reshaping its economic relationship with the U.S. These actions are also part of a broader trend among global central banks to reduce reliance on the U.S. dollar and diversify into other assets like gold. As these shifts continue, the U.S. faces significant challenges in maintaining its fiscal health and its position in the global economy.